If you run a limited company but still feel slightly unsure how it works, you're definitely not alone. Most business owners are told to set up a limited company, often for tax reasons, but no one properly explains what that actually means. So you end up hearing terms like director, shareholder, dividends, profit, and just hoping you're doing it right. In this video, I'm going to explain it all in plain English so it actually makes sense. Hi, I'm Marie from Next Steps for Business, and I'm an accountant and business owner. I help small business owners understand how their businesses actually work in plain English. Because a lot of the time, it's not that things are complicated, it's just that they've never been explained properly. The reason limited companies feel confusing isn't because they're complicated, it's because they've never been explained properly. Most of us are taught how to get a job, earn a salary, and pay personal tax. But running a company is completely different. So when you suddenly have a separate business structure, it can feel like you're missing something. The single most important thing to understand is this. Your limited company is separate from you. It is its own legal entity, which means the company is not you and you are not the company. You own it, you run it, but you're not the same thing. Once you understand this, everything else starts to make sense. Think about it like this. Think of your company like an app on your phone. Your phone is yours, but each app runs its own space with its own data. Your company works the same way. It's yours, but it runs separately from you. Now, most small business owners actually have two roles in their limited company. You're the director and a shareholder. As a director, you run the company. As a shareholder, you own the company. And it's because of these two different roles that things can start to feel confusing. Because the company is separate from you, the company earns the money first, and then it pays you. And you usually pay yourself in three ways: salary, dividends, or expenses. Salary is for you as a director. It's for the work that you do running the business. Dividends are profits that are paid out to you as the owner, as the shareholder. And expenses are costs that you've paid for personally for the business, like mileage and things like that. And this is where most of the confusion comes from, because the money in the business bank account is not your money. That belongs to the company. That doesn't mean you can't take money out, it just means that how you take it out matters. Most businesses are never taught any of this. So they end up second guessing themselves, feeling unsure, or just hoping they're doing it right. And that's completely normal. It doesn't mean you're doing anything wrong, it just means that no one's explained it clearly yet. If you take one thing from this video, let it be this. The company earns the money first and then it pays you. Once you understand that, everything else becomes much clearer. So you don't need to memorize complicated rules or anything legal to run a limited company. But understanding the basics gives you something really important and gives you confidence. And when you feel confident in how your business works, it becomes much easier to grow it. If you found this helpful, make sure you subscribe for more clear, practical guidance to help you work more on your business and not just in it.